It's a very strange, eerie time right now. I'm watching the stock market start to fall a bit, showing some cracks. I'm watching today cryptocurrencies really get hit pretty hard. Gold and silver getting hit pretty hard. Gold's down over $50 an ounce. And I see two stories come out about the consumer. I've been talking a lot on the recent shows about subprime, zombie corporations, zombie properties, all the bad, loans in the banking system. But let's talk a minute about the consumers. We know if you're watching this channel, others like this, you know that consumers, the bottom 90%, are not doing real well right now. Okay, and so the question is it going to get better or is it going to get worse? Are we heading back into a time where we're going to see things deteriorate even beyond where they were during the great financial crisis? And when you see all of these dominoes ready to fall, it's hard not to come to the depressing, unfortunate conclusion that this is a cycle that's going to have a bigger downturn. Okay. So just when you thought it couldn't get any worse, out of Bloomberg yesterday, high-risk consumer borrowers rise to most. Since 2019, the share of consumers in the subprime credit risk category has reached levels not seen since 2019, a sign that a growing number of borrowers are in poor financial health. Subprime borrowers accounted for 14.4% of consumers tracked by credit reporting firm TransUnion in the third quarter. That's up from 13.9% in the same period last year. It's the highest share for the period since, again, 2019, when 14.5% of borrowers fell into the subprime category. So the number of high-risk borrowers shrank during the COVID pandemic and immediately after, as consumers took advantage of reduced expenses and relief programs, right, to pay down debt, according to TransUnion. The tier, it says, has since grown for 4 consecutive years. Meanwhile, the share of consumers in the healthiest category, Subprime, has consistently grown. We talk about how, the bottom, the top 1-5%, whatever you want to call it, is running everything, is supporting the entire economy. But when you see days like today, where you see cryptocurrency down, you see gold and silver down, assets, right, equities, are we having a liquidity pull from cryptos and gold and silver? Is the confidence being shaken across the board? We know what's happening with commercial real estate. Watch my video from yesterday. What I'm saying is when this starts to crack in those categories, which it will and it is, you're going to have that top tier also pulling back, okay? Some of the top tier already, as we know, I'm sure on prior shows, are still living paycheck to paycheck, okay? They just have more to spend, so they take on more obligations. But when that well runs dry or things get challenging, you're going to have everybody running for the hills taking cover. Okay, now what's the solution? Obviously, the main solution from my perspective, not financial advice, just do your best to pay down debt and not take on unnecessary debt, at this point in time. Think about, a couple steps down the road. If you have dry powder, look at what Warren Buffett's doing. He's sitting on massive, massive cash stockpile. He knows that this is going to come down, and he'll come in and swoop it up. So if you have dry powder, if you're not one that's living literally paycheck to paycheck, there'll be some opportunities. But if you are in that, let's say 90% lower tier categories, you got to think about tomorrow and not just make, let's say improper or reckless financial decisions today. Again, that's just me speaking kind of off the top of my head. It's probably common sense, right, for most people. But look at the buy now, pay later exploding, credit card debts exploding. A lot of it's because consumers are they're using those tools to pay bills, they're using those tools to buy food. And that's a different scenario. That's sad, and it's probably not going to end well. Because we are seeing a divergence in consumer credit risk, with more individuals moving toward either end of the credit risk spectrum. Jason Lakey, Executive Vice President and Head of Financial Services at TransUnion, said in a statement, this shift suggests that while many consumers are navigating the current economic climate well, others may be facing financial strain. I would question that. Leave your thoughts and comments. The shift comes as consumer debt balances grow across the board. Total credit card balances hit $1.11 trillion in the third quarter. Meanwhile, unsecured personal loan origination grew 26% year over year, and their balances hit a record $269 billion. Unsecured personal loan origination, right? What is that? Okay. I mean, it's credit cards, it's lines of credit, it's buy now, pay later. Okay. It's not HELOCs and refis. Okay. That's secured by real property. The growth in personal loans isn't cause for concern just yet. Okay. They always say that. According to Michelle Ranieri, VP and Head of U.S. Research and Consulting at TransUnion, lenders are emerging from a slower period for borrowing, and some people could be using the loans to consolidate credit card debt, securing a lower interest rate, she said. Understanding consolidating credit card debt, I get it if you're trying to go into a lower rate, but that at the end of the day, that debt still has to be repaid. And if you lose a job through whatever means, whether your interest rate gets taken over, AI takes it, whatever it is, it doesn't matter if the interest rate is lower if you can't make that payment. Okay, so the key is to try to keep that debt level just as low as possible. But she is keeping an eye, she said, on subprime borrowers and whether the consistency of growth in the category, they make it sound good, right? Consistency of growth. That means more subprime borrowers. She said she would keep an eye on whether that category keeps growing, right? Some consumers fall into the subprime category due to a series of sloppy looking pays. That's a quote, sloppy looking pays. That's a new one, right? Rather than a fundamental credit issue, she said. Other times they really can't afford the debt they have. That's where it gets a little bit more concerning, she says. And I saw another story that kind of builds on this whole idea of consumers that are just struggling. It's out of Fox Business that says fraudulent rental applications, that's today, a surge nationwide. So a lot of people are they're basically falsely completing rental applications so they can get their foot in the door on these rental units. A lot of them are falsifying income, financial statements. They're doctoring up, using AI and all these tools, pay stubs and things of that nature. Check out the article. It's from Fox Business. But fake rental applications are proliferating across the country, it says, as the U.S. rental market has become increasingly unaffordable and competitive. Greystar, the country's largest apartment landlord, told Fox Business that it's seen a clear increase in fraudulent applications nationwide. And it's become much more sophisticated, they say. Some most advanced cases involving AI-generated documents and fabricated payroll systems, according to Greystar. Okay, as rental prices rise and affordable housing remains scarce, scammers are getting more sophisticated. They've actually begun using doctored pay stubs, fake employment letters, and even AI-generated credit profiles to qualify for luxury apartments they can't afford. Okay, so at the end of the day, that's going to result in, if you get yourself into an apartment or a rent situation that you can't afford, okay, after you don't pay rent for a couple of months, your landlord's going to serve you a notice and they're going to evict you. So it's like, I'm not so sure what these people think they're solving, other than maybe putting their family through a whole lot of pain and misery and embarrassment by trying to lever in. Now, if they're not biting off more than they can chew and they're just trying to get a place to put a roof over their head for their family, I don't condone obviously anything that would be dishonest on an application, but you have a sign of some of it's just dishonesty, right? And some of it is just people struggling. Okay, as rents go up, we know homes have become pretty much unaffordable in this country for most right now. So I thought I would share that story with you and continue to be out here, as things unfold with the banking system, with the consumers. Let's see if there's a recovery, and if, let's say the roses and the unicorns can continue for much longer. Seems to me, I want to get your thoughts and comments, that it's coming kind of to a close here. With that being said, as always, if you guys enjoy the content, please leave me a like. If you're not subscribed to the channel, please subscribe for me. I do enjoy receiving and reading your comments. Thanks for all the new subscribers who have been coming around the last couple of weeks. That being said, I'll talk to you soon. Bye.